It is election week of 2024, and we've got a lot to talk about in this video. I want to go over some previous things from last week to get us prepared for this week as far as the trading, but also potentially buying some long-term shares, seeing the outcome of the election. And then we had Jeff Bezos last week that right after Amazon had amazing earnings, has decided to sell his shares at $200 again. What does that mean for the market and Amazon, right? And as you as a retail investor. I also want to talk about some economic reports that are on the docket this week and from last week. Our labor market jobs report wasn't as good as it should have been. It kind of got overshadowed again because, as a reminder, anything leading up to the election is going to be kind of downplayed in a sense, simply to get a lack of quote unquote fear or uncertainty or any doubt that spurs any direction leading up into this pivotal election here. So we'll have the truth that will reveal itself very soon. And if you have been following this channel and also some of my fellow peers in this space or just on these public platforms, if you're getting the sentiment of not everything's looking as good as we think, it's kind of shaky. So yes, we're at all-time highs. Yes, we've been running hot in a bull market for the last couple of years. So now it's time to, what does this look like? Can we continue higher, or are we going to have some type of healthy pullback for more buying opportunities? All that will be discussed today briefly. If you don't know who I am, my name is Dr. B. I'm a holistic life and business coach and strategist for entrepreneurs and thought leaders. I'm also an investor and options trader. Been an entrepreneur for the past 8 years, former pharmacist, undergrad in chemistry, matriculated my way up to now where I am hopefully serving in a powerful way to educate and inform and just empower people to want to be better, not only for themselves, but their family members, and also in learning new skills that maybe no one has ever taught them before. So if you're here for that, you've come to the right place. Go ahead and hit that like button, subscribe button, notification bell if you've already been here before. If you need to hear out and see if this information is valuable to you, go ahead and hit that if you hear something that you actually like in today's video. All right. So my purpose today is to get us ready for the week, go over some previous things, and get us up out of here. All right. So first, we want to go over our economic calendar. Okay. As I said before, some big things that are on the docket you want to pay attention to is obviously our election factory orders coming in on Monday. And we also have PMI on Tuesday, as well as our big data day, which is going to be on Thursday with jobless claims. Again, how many people are filing for unemployment, as well as that interest rate decision on Thursday afternoon. Okay. Fed Powell can be coming out and saying, how's this data? Are we getting a rate cut? Another one? Are we pausing? What are we doing here? All right. Because the first rate cut kind of spurred some interest rates back higher. Our inflation has started to increase yet again. So what is he going to do with that information that he has now? The unemployment data, especially from the hurricane and these recent layoffs, has still not come on these more recent reports. So that is something to look out for in the coming months after these true labor market reports come out. All right. So you just want to pay attention really to our labor market and how many people are filing for unemployment, how many people are getting laid off, how many people are going into part-time jobs, whatever it might be. All right. So that is a real pivotal thing, along with obviously our consumer debt, consumer spending, and ultimately our U.S. debt. Okay. So all that being said, let's jump into our earnings for this week. Okay. Last week was a big week for our Mag 7, our tech earnings, our blue chip companies. But now we have some still big players in the game that may some of you own or considering owning, but we want to pay attention to Palantir. Obviously, I like HIMS. Another one, Super Micro. I just want to kind of see how that responds after all the negative sentiment it's been getting. Is it getting delisted? What is going to be happening? It's sitting at $26 at the time of this recording. Pre-stock split, this would have been $260. So it gave back all the 2024 gains that it had. And that's what can happen with a specific company. All right. You just never know. So Celsius, I want to see what's going on with Norvo. I'm very interested in the healthcare sector, especially leading into a recession or some type of downturn or whatever it might be. Healthcare stocks typically come through, especially if we have some type of health crisis. So I am paying a lot closer attention to a Moderna, things of that nature that may spark up during this potential season. Datadog, always interesting. DraftKings, I like as we've gotten more into betting, and maybe that might go into potentially how people have been betting leading up into this election. That could be something that spurs DraftKings Q3 results. Who knows? Affirm, any type of fintech company, very similar to SoFi. I've got my eyes on it. So pay attention to Affirm. Don't let Pinterest slip out of your hands either. That's very, very interesting on that horizon. Very similar to our Reddit. So Pinterest, any type of social media company, more so the sleepers, the snaps, Pinterest. Pay attention to those just on the side watch. All right. So those are our earnings for this week. And for those that are traders or like to trade options, right, you can now maybe open up a little bit more to post earnings trading from your normal companies that you like to trade, right? The Apples, the Amazons, Googles, Meta even, and then ultimately SPY and QQQ. We still have some semiconductors on the docket, so be mindful of NVIDIA, affected potentially by ARM, and Qualcomm coming up, and SMCI. So be a little bit mindful of the semiconductor sector this week, as it could be a little bit skewed because of some semiconductors that are potentially coming out and how that may affect NVIDIA, things of that nature. NVIDIA has earnings, the last big blue chip company coming out on November 20th. So we got a couple more weeks on that. All right. Really quick, if you didn't know, we do have a Discord community, quick interlude Discord community, where I'm sharing not only trainings of this information here on our trading floor, but also information to spur this right here from the life coaching perspective. So if you need to get your mind right, your heart right, your spirit right, if you need to understand purpose-driven work for you, why I'm unmotivated, things of that nature, this is the place for you. Also, if you're wanting to learn this skill set of the financial markets and their credit information as well, if you've seen some of my videos on this channel around business and personal credit, check those out. And you can also check out my podcast that's linked down below. All right. Leverage Talk. All right. So I look forward to seeing you all inside of Leverage University very, very soon. All right. Let's jump into the election historical chart. So you can take a screenshot of this, pause it, whatever you need to do. But this is a example about White House control and Congress control and an average 3-month S&P return during that period of time. So scenario one, if we have a Democratic Party get into the White House and Democratic Congress control, we typically have a decent return. But I just want to spur your attention to this split Congress control is the highest typical return from years previous. You can see when there's a split, but there's a Republican Party in House, we typically have a slightly less return. But when there's a Republican party in space or in House and potentially ruling primarily Congress, that may spur not maybe long-term investing, but a lot of volatility in the short term, right? So that's very good for traders. So if you have been, maybe you stumbled upon this channel, if you were more intermediate or advanced and you remember trading back in 2016, 2017, 2018, there was a lot of volatility when Trump got into office, right? So you want to make sure that you're understanding that there's long-term investing, and then there's also really volatile times that can create really good trading opportunities in a short period of time. All right. So either party, I think, is going to be a little bit skewed in this election simply because there's a lot of emotion from previous elections that weren't there, that are now in these types of elections. So you have more voters, more people attentive to who's going to be in office. So I think personally, it may be slightly skewed based on this data just in these last recent elections because of the human beings that are now in these party seats. Okay. So just my opinion, do your own due diligence, not financial advice, just take it for a grain of salt. But I just want to present that information. Okay. If you haven't seen my video over the recession incoming or how these data reports, why does everyone keep talking about recession, Dr. B? Like, why do you keep bringing it up? It seems like the market's doing fine. If these candidates get into office, either one, the market's just going to take off, right? And yes, it might for a period of time, maybe a quarter or a couple of quarters to get them acclimated and inaugurated into their seat. But this right here, all I want you to look at is this gray area, are all the recessions that have come. So the gray area from 1980, early 1980s, And then you had 2020 right here. And then there's the housing market crisis. And there is the dot-com bubble. And every time we had a curling or an inverse bond yield, okay, that starts curling up above this black line, it goes under and back up, a recession comes. Under, back up, recession. Under, back up, under, back up. There's 2020. And look at where we are sitting right now. So it may not be immediate, but it will be out of the blue for some, okay? And the reason why it seems very delayed, while people have been talking about, maybe we've been in a recession, but we just didn't know it. It's because we're leading into an election year. And also, it gives, unfortunately, the wealthy, the billionaires, the companies that hold up our economy time to prepare. We're just in that nature, okay? So if the Bezoses, the Amazons, the Metas, these companies that are laying off employees, AI spending, trying to go more online, lower their cost basis, why do you think they're doing that? It's not only because their stock price is at an all-time high, but it's also understanding that, hey, I can prepare for this, lower my overhead costs, free up my cash flow, and get through these times, right? And still be profitable. Making sense? All right. So just my thesis based on factual data. I'm not going to bring any far-fetched things to my mind, first of all, and personally on these public platforms. If you can't just show historical data and people say, well, if it's happened 5, 6, 7 times the same manner, maybe I should consider it. Okay. So just want to present that. Now let's jump on the charts and get us up out of here. All right. So when I jump on the charts, I know I have a lot of beginners on my channel, so I want to make sure that everyone feels welcomed and not confused and go away from this video because they see a big chart. All right. For my intermediate advanced, you will understand this. And if you don't understand it, please welcome it into your life and your arsenal because this is where the money's made. Okay. So I'm going to start on SPY, okay, the S&P 500. And I'm going to start on a weekly time frame. Each candlestick represents what happened to the S&P 500, right? The top 500 companies at the current time of this recording and what they've been doing over a period of time. So if you look at my scroll at the very bottom, do you see 2022, 2021, 2022, 2023, right? And I can go over all the way across into present day. So you read a chart from right to left. So the first thing I notice is you see this weekly candle. We've had 2 red weeks, okay? Last time we had 2 red weeks, it followed with a 3rd red week and then a potential 4th red week. And then we start to rebound. Okay. So if this continues in the same manner, this 3-bar pullback, then we could continue potentially in an equal low of a 3-bar pullback like that. And we could still have higher lows that are being formed. Okay. So that is a possibility for us to pull back to that 555 to 557 area. Okay. And that would still technically be a higher low. Okay. On a weekly time frame. All right. So I'm looking out for that. But as of right now, right, we may potentially have lower to go. If I go into a daily candle, you can look at this daily candle and some of you will understand this, but this was once a big red solid candle. Okay. It was once a green candle. Okay. The longer the top wick, that's where sellers are typically present. So if this was a big red candle, it got sold back down to where there's a very heavy top wick and the body of the candle closed in this manner. So that's a very, as we call it, weak close, W-E-A-K, a weak close for a daily candle because it could not go up any higher and got sold back off. All right. So when we see that type of candle, we see it right at a very key level at 575. What happened last time it got below 575? Came all the way back down to 565. So this time, what do we think we're going to do? It's going to try to get down to that 565 level. So levels really quickly. There's a quick educational piece for my beginners. Levels you want to pay attention to on SPY this week, 565 to hold. Okay, 565 to hold. You want to pay attention to this 575. If we can't get back above 575, we're going to continue weak. Okay, WEAK. Okay, we're going to continue to be weak. If we reclaim 575, just say the election gets us above that, right? If we get above this 575, then that's when bulls can get a little bit of control regained, right? Because now we're back above this area where we bounced last time and went high. So 575 is going to be your key marker this week to see if we reclaim or we continue weak underneath. All right. So if you're looking to play calls or the upside, you want to look for a 575 reclaim and then look for 578. If we get above 578, cool. You can push back up into 583. Okay. That's how I would look. Just like that. Okay. Now, if we cannot get above there, then you want to, for my call individuals, my bulls out there, you want to look for a hold of 565, okay? And see if this level, if you get some buyers stepping around at 565, to retrace all the way back up to that 575, 578 to try it again, okay? So very easy chart in my opinion to read at this point, but right now the bears have control, okay? So I'm paying very close attention. If we pop back up any, do we get back above this 583? Because if we can't get back above 583, all it's going to do is create another lower high, and that's going to confirm again that we're still weak. All right. So even if we push back up, I still need to watch these higher time frames to see if we break back out. Now, Tom Lee and a lot of investors were talking about this 6,000 SPX level, this 600, 590. That is still a possibility, right? So if for whatever reason the market still wants to continue, right, and go up, that is still a possibility if we break out of this. Maybe it's NVIDIA's earnings or something like that. So if we break very strongly out of this consolidation, get back above 583, that's going to be your signal. Back above 583 is going to be a reclaim that's going to be very massive, and that's where you can see that push up into 590, 6,000. Okay. But we're going to need the Fed's help. You're going to need good data to come out, a potential presidential candidate where it's a clear win one way or the other. If it's kind of skewed and barely, a win from one party or the next, I think that could be a little bit concerning for the market. Okay. So levels are pretty clear. Trade off the levels, watch the price action, react, don't predict, and you'll be okay. All right. QQQ levels. All right. QQQ levels. Again, same type of sentiment here. When you have this long wick at the top on a daily candle, right, and you see how this double top looks like it came in, I want to look and see the lower end of the range personally if I am a bull or looking to catch this back on the upside, okay? But for right now, we're looking at rejects or puts. So if we push up, we're looking for that push back down on puts, okay? That's the idea right now until it fails. The only way I would look for calls more confidently if we reclaim 494, okay? 494, or maybe consider calls down here at 477, 478, okay? So that would be ultimately where you'd want to consider calls if we get back above 494, or if we're down at 480, 478 in this range, okay? Ultimately, you'd want to hold up 480, in my opinion, because if you get below 480, I think that gap's going to get filled and you'll come down to 475, okay? So right now, support is 486, okay? So look out for that 486 to hold, and then ultimately getting back above 491 and 494, okay? There are your levels on QQQ. Quick for my small cap individuals, IWM, levels 216, okay? You want to look for a reclaim back above 221 to get back strong, to move back to that 225 area. If we can't get back above 221 and we break down below 216, I personally think that it's going to get a little bit weaker and it's going to start breaking down a little bit more to come down into 212. Okay, so right now we're all in support right now. Okay, do you see this area? Buyers, 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 buyers. Anywhere 216 to 218 is support for IWM right now, but it has broken a little bit of trend just slightly. You can see that it retested that 221 and rejected right off of it, right? So that's going to show you that 221 is a very important level. Okay, it's acting as resistance right now, that red candle. All right. Notable mentions, and I'll get us up out of here. Notable mentions, NVIDIA. Okay, NVIDIA had an ad into the Dow Jones replacing Intel, and that's why we have this big green candle after hours. So for those that don't know, this dark black area is when the market is open during market hours. The light gray area is after hours when the market's closed, so at night and early morning. Okay, so this happened after hours, which will create a gap in the stock. So NVIDIA levels for anyone that's looking to trade NVIDIA this week, still a trading opportunity, is you want to watch below 140. Okay, so if it stays below 140 and this 139, it could rotate right back down to 137. You want to watch that 137 as support. So you have 139, 137, and then ultimately back below 135 is when it gets weak. Okay, so look out for NVIDIA. If it breaks above 141 and breaks above 140 again, that's where you'll see that it would break out of this channel. Okay, so look out for that. If it breaks back above 141, okay, there's NVIDIA levels. Let's look at Amazon. Okay, so this may be concerning for some, but it could be a great opportunity for others. Amazon had amazing earnings, and then Jeff Bezos said, nope, I'm selling at 200 again. So that could present a little bit of fear in the market from certain unsavvy retail investors. They may want to also sell with Bezos. So you want to see this 195 hold. Okay, you see here that was previous high. And you want to see this push down into 195 in the short term and hold that. Okay, and get a little bit of relief off of this level. Okay, if for some reason you get below 195, then that's a little bit concerning because now you've broken back underneath and you see what can happen. It can pull all the way back down to 189, 190. Okay, so watch out for 195. See if that holds and react off of it. So if it shows a little bit of support, cool, you can play calls back to rotate back up to 199. If it does not hold and breaks through for whatever reason, okay, well, you may consider some short-term puts, okay, because Amazon's very strong right now, back down to 191, okay, underneath 195, okay. 190 will be your next level, and then ultimately back at 180. If it breaks below 190, then it's giving back the whole move. Very similar to what Google did, right? So Google broke above a level. Now it's holding above, but it gave back from 182 all the way back down to 171, 172. So a 10-point move given back on a very solid earnings. So that could happen to Amazon as well. So look out for that. But now Google's in a really good position here above this 168, 169. Okay, so watch Google here and see if it maybe gets a little strength, right, potentially with the market, and it starts to curl up off this 169. Okay, so there's Google, Amazon. So all those are fair game. Remember, Palantir comes out tomorrow after hours, so I'm very interested in seeing if Palantir finally does one of these okie dokes, surprises people, and does a Robin Hood, and pulls all the way back, right? So that will be very interesting to see. And for those that don't know, here is Robin Hood. Okay. Robin Hood was expected to have really good earnings, and it had a double miss, but it had run up so heavily, right, from about $8 to close to 30. So you got to expect a company to cool off just naturally, and earnings was that catalyst to say, hey, we've been growing, but we did have a downtick on revenue and EPS, earnings per share. But do you see how it's holding up this 23 level? So it's back at support. So you can consider some Robinhood shares here to rotate back to the high. Okay, so look out for Robinhood, but that's what I'm looking at potentially to see how Palantir may react. And does it pull back or does it take off above 45? Okay. So it takes off above 45. You've got pretty much 50 in range. If for some reason it slightly misses, I think that could be pretty drastic because you have shareholders that are like, oh my gosh, I need to get up out of this thing, right? And it could pull back pretty heavy. All right. So that could be a good trade on Tuesday potentially for a post-earnings trade. All right. I think that's it. I'm just making sure nothing else. All right. Man, that was pretty quick. I like it. Let's see. I think I showed everything here. Treasuries. Cool. All right. Well, peace, love, and blessings to you all. Thank you all so much for your time, your attention, and your support as well. All right. Please make sure you hit that like button before you go. Hit the subscribe notification bell, and I will see you all in the next video. Make sure you click those links down below to join Leverage University, get inside of our Discord to get more acclimated into these strategies and understand the skill set. If you need one-on-one attention, there is a mentorship available to you. And I do have clients that are advocates and working with me currently right now that if you'd like to talk to some of them about some of their results or just the learning opportunities they've had and learning nothing to coming to learning something and making some money along the way, you're more than welcome to reach out, book a call, and I'll talk to you about all the opportunities that we have available to you. All right. Peace, love, and blessings. Talk to you later. See you in the next video. Bye-bye.